Welcome to Fireside Chat. My name is Sai. Today, let's talk about what types of index funds you should invest to achieve financial independence. Let's talk about what index funds can help you achieve your FIRE numbers. Quick disclaimer though, I am not a financial advisor. This video is for pure educational and entertainment purposes only. So what is an index fund? An index fund is a type of mutual fund or exchange traded fund with a portfolio constructed to track the components of a financial index. So what does that even mean? When S&P 500 market is trending up or down, the index fund that tracks the S&P 500 market will move at the same time. Here are the examples of the S&P 500 mutual funds. Vanguard 500 Index Fund Admiral Shares VFIAX, Fidelity 500 Index Fund FXAIX, Schwab S&P 500 Index Fund SWPPX. Charles Schwab, Vanguard, and Fidelity have index funds that track the US total stock market performances. Here's my favorite index fund. Vanguard has the Total Stock Market Index Fund, or VTSAX, that tracks over 3,700 US stocks, including small, mid, and large cap growth and value stocks. Schwab's version of VTSAX is Schwab Total Stock Market Index Fund, or SWTSX. Fidelity's version is Fidelity Total Market Index Fund, FSKAX. They also have specific sector funds that track the tech companies, utilities, healthcare, financials, and real estate. The historical average annual returns for the index from 1926 to 2018 was about 10%. That doesn't mean you will always get 10% return every year. There were some years when I got negative percentage in return due to a correction or a recession. There were also some great years when we got tremendous returns to the market. Many Wall Street experts in 2020 thought the stock market was going to perform just like in 2008. However, the S&P 500 ended up with a total of 18.4% in return. So why should you invest in an index fund instead of keeping cash in a savings account with the bank? Let's talk inflation. Your money is constantly losing value by keeping just cash in your savings account every year, by keeping it in the savings account that pays you less than 2% in interest rate. The average inflation rate in the US from 1990 to 2020 is about 2 to 2.5%. It's not a bad thing to have a high yield savings account. I have one. I have several. If you're just starting out the FIRE journey, I would recommend that you have at least 3 to 6 months in emergency fund. I would also recommend using a savings account for buying a house, buying a car, saving for a vacation, or any other short-term major purchases under 3 years. Let's compare the performances between 2020 high yield savings account and VTSAX. In the year 2020, if you had $1,000 in a high yield savings account at 0.4% interest rate, you would have made $4 in total interest. At the 2% inflation rate, the $1,004 in your savings account is now worth $983.92. In 20 years, your $1,000 would hypothetically be worth about $603, assuming the inflation rate stays at 2% average. For the same year, if you invested $1,000 in the VTSAX, you would have made 21% in total return up to $1,210, not counting the dividend reinvestments. With the 2% inflation rate, you still would have made 19% in net return. I personally own VTSAX and VFIAX. What's even crazier is that VTSAX has given me 63% in return for the last year. It has outperformed the S&P 500 index fund that has given me 56% in return for the last year. Obviously, you're not going to get 21% or 63% every single year from VTSAX or any other index funds. But I would also like to note that since the year 2000, VTSAX has averaged 8% in total return, 17% for the last 3 years, 16% for the last 5 years, and 13% for the last 10 years. We don't know when the market will crash again, but dollar cost average will always win the fight. Now let's talk about the differences between mutual funds and ETFs. You don't have any control of the price for the mutual fund when you invest in it. Some mutual funds require you to invest with a minimum amount between $1,000 and $10,000. For VFIAX and VTSAX, your initial investment needs to be at least $3,000 to invest in that mutual fund. After the initial investment, the minimum to invest is $1. You can even schedule automatic transfers after the initial investment. If you don't have $3,000 set aside, that's okay. I would recommend going to Fidelity or Schwab. Their minimum investment amount is $1. Yep. There is no minimum amount you need to invest in an ETF. ETFs trade like stocks. You can buy one share of ETF when the market is open. If you want to buy shares of ETF at a price you determine to buy, then the ETF is the right choice for you. Now, let's get into my computer and let's look up some ETFs, index funds, and let me show you how to purchase them.
Welcome to my computer, guys. So I want to recap a little bit on the benefits of index funds. So the benefit of owning an index fund is you don't just own one stock, but you get to own the entire stock market if you want to with a low cost. Not everyone is an individual stock picker, so this is a great way to diversify your portfolio by owning over 3,000 or 4,000 stocks. I personally own index funds in my IRA, 401k, and taxable brokerage accounts. I love index funds. I always treat my index fund like my savings account, but with a higher interest rate. That's just my mentality when I view, that's how I look at index funds. I always see them as my long-term savings plan for at least 3 years. If you're looking to buy a house in about 3 years or more, I would recommend parking your money in the index fund. If it's less than 3 years, then it's probably better to just put it in a high-yield savings account so you don't have to worry about the short-term volatility. There's also a lot of tax efficiency in owning ETFs or index mutual funds. They have very little turnover rates compared to actively managed funds. So you pay a lot less taxes on them. All right. So let's go ahead and get into how to find the right index fund for you. So I personally own Vanguard and Schwab. I don't have Fidelity, but here I'm going to show you how to find the index fund in Vanguard. You can Google Vanguard mutual funds, and then this should pop up. Choosing your mutual funds here. And then what I do is I go into the filter button here, click all Vanguard funds, and I just pick US stocks. You can pick large cap, mid cap, small cap, but I just leave it as is. Here's the key thing. You want to deselect active. So let's go ahead and look at these and see funds. So they have VFIAX. That's the one that I've been talking about, the S&P 500 Index Emerald shares. The other one that I talked about was the VTSAX, Total Stock Market Index Fund Emerald shares. You can compare the funds and how their performance by clicking here at checking next to VTSAX, VFIAX. So let's go and compare these two. All right, click compare. All right, so now the comparison chart pops up, and now I added the ETFs as well here, the Vanguard S&P 500 ETF VOO, and then the Vanguard Total Stock Market ETF VTI. So VTI is basically the same as VTSAX. VOO is the same as VFIAX. So one is an index fund, mutual fund, and the other one is an ETF. So the expense ratio at 0.04%, that's very, very low. At ETF, at 0.03% is slightly lower than the index funds. It tells you what the prices are. The prices to me don't really matter because I'm looking at this more of a long-term plan. For 1 year, as I mentioned before, VTSAX has grossly outperformed the Vanguard 500 Index Fund at 56% and VTSAX at 63%. If you look at the ETF for VTI, it's the same performance. That's almost 63%, and then you have 63% at VTSAX. Okay. And look at the 10 years. That's what I look at the most when I choose an index fund is 10 years, because I'm choosing to save for the long term. So at 14% 10-year return, that is incredible. Okay. And even with it's very similar to the Vanguard 500 index fund, and it looks like it's all the same for the ETFs. Let's look more specifically into the VTSAX. So as I mentioned before, if you open up a Vanguard account and you choose to buy VTSAX, your minimum investment is $3,000. Okay. And it also says available as an ETF. As I mentioned before, it was the VTI. The price right now is $105.71 per share. And here's the hypothetical growth. So if you invested since 2011 at $10,000, right now you would have about $36,000. Okay, that's a very, very good return. If you scroll down more, it tells you the number of stocks that the VTSAX owns, and it would be 3,700 stocks, fund total net assets at $1.2 trillion. It also tells you the 10 largest holdings. So the 22% of total net assets of these stocks are in the portfolio. So at Apple, Microsoft, Amazon, Google, or Alphabet Inc., Facebook, Tesla, Berkshire Hathaway, that's what Warren Buffett owns, JP Morgan Chase, Johnson & Johnson, and Visa. Okay. It also breaks down in by sector as well for the VTSAX if you want to look at it here. Basic material, consumer staples, energy, financial. So it looks like technology makes up the most of the VTSAX at 25%. That's a quarter of the portfolio. And the second biggest one would be consumer discretionary, as well as industrials at 14%. Okay, that's how you can break down and look at each fund. So you're still deciding which broker is the right one for you. You can go on Fidelity and do some fund research. You can Google that and put Fidelity Fund Research and then put in VTSAX, FSKAX, and then SWTSX. So they're all the same. They're all total market index funds, just managed by different brokers. If you look at the overview return, they're all the same, about the same at 63% for the last year, 17% for 3 years, and then you look at 10 years, about between 13.5% to 14% return. Okay. I would also research about management and fees. I care about expense ratios. I picked VTSAX several years ago because that's the only fund that I knew, and I already have Vanguard. But if you look at Fidelity, it's even lower. It's the lowest at 0.015%, and Schwab is at 0.03%. And Schwab does not have minimum investment. Okay, so don't get thrown off on that. This is only if you open Fidelity account and you decide to invest in VTSAX or Schwab. I don't know why you would, but then you would be required to invest minimum of $2,500. But if you go into Schwab directly and open up a SWTSX, there's no minimum investment. So I hope you found some of this helpful. I'm going to talk about the differences between Roth IRA and traditional IRA in a future video. So let me know in the comment section down below what ETFs, mutual funds, or stocks you own in your portfolio in your taxable brokerage, 401k, or IRA. I would love to hear your thoughts on that.
Thank you so much for watching my video. If you find this video valuable, please hit the like button and subscribe to my channel. I'm going to post a video every single week about the FIRE journey. Don't forget to follow me on Instagram. I hope to see you in the next video. Have a great one.
Thanks for watching. Don't forget to hit the like button and subscribe for more FIRE videos.